Hey folks, L.A. Little here with TA Today, and what I want to do today is talk about silver because everybody's talking about silver and everybody thinks it's going to the moon. And I'm here to tell you, it may, but you need to take a rational approach because you're going to get burned if you don't. And so let's dive into this. What you really need to do is ignore the hype, right? Everybody says we're going to go, but you need a plan. You need a plan as to how to get there, right? It doesn't just go to the moon. I mean, it's already made a tremendous move if we look at silver on the chart. And I'm looking at the futures contract. I got it on a weekly. But we'll get back to that. Let's first go down to what you really need to think about, and that is risk. If you're going to enter a position, you're going to have to control your risk in some way. And so I pulled up the silver chart using SLV, the ETF. You could also use PSLV. Now, if I'm investing in one of those, I'm probably going to invest in PSLV because there you actually have the physical silver registered numbers locked in a vault. Whereas in SLV, I don't know if that's really the case. So that's the first thing. But, I'm going to use SLV because that's the more liquid one and what everybody wants to use. And if I do that, and if I go in here and look at this, you've basically got an inside bar. And we're going to see that over here as well on the silver chart, the futures chart on the COMEX. But inside that, right, you got a lot of volume pickup. That could be a top. That potentially is a top. Now, we don't know that. I mean, you could get a higher volume bar on the very next bar, right? So, we don't know that. It's just that you have to recognize that's possible. And the fact that it's blown in here like it is, and I'll blow it up so you can see it well, you can see it's inside the prior bar. And when you have a bar that's inside the bar, that's more or less a hesitation. And that says you could end up putting in some sort of a range up here. Now, silver has taken hits along the way. If you go back and look at this hit, and you look at this hit here, these were 15%. And you had nice volume build up here. You see the same sort of thing. You got a doji on the next bar, right? And then you got the pullback. Well, here you've got your doji. So you got a nice push. You get a doji. Are you going to get a pullback on the next bar here? These were 15% hits, both of them. As you go up in price, that is going to increase. It's probably not going to stay 15. You're probably looking at 20 now. And so where does a 20% hit take you? Well, it takes you back down to around probably 57, I believe, if you do the numbers. Yeah, probably somewhere in this area. You got volume there, somewhere in this area that you'd have to be considered as take your risk back to. And so if you're buying at 66, are you going to be holding at 56? Are you going to take a $10 hit, a 20% clip, or a 15% clip from that price? I don't know. That's hard. That's something you have to decide. But anyway, you need a rational approach. You've got to decide, okay, what can I rationally do here with this? And am I going to hold? What's my plan? That's the issue. When you think about a trade, you should think about what's my risk before you think about what's my reward. Because you've got to control your risk. That's the only thing you control in the markets. And so you've got the setup here for potentially some sort of a pullback. Does it mean it's going to happen? Not necessarily. Can it go higher? Yes, it can. Let's look at the daily chart. If we look at the daily chart here, you had a push up, nice volume, right? Spike high. And then you gap down and it's bought, right? So it opens a little bit lower than where it closes. So you kind of got a pickaxe reversal. You get the spike on the next bar, but it's a doji. And then you get the drop again. And now it tests that bottom and it holds. That's a good sign. It's a little negative that it's a dark candle, but it's a positive in that it held. And then on Friday, when everybody comes back to work on the first of the year, the first trading day of the year, it actually opens gap up and then closes down. That's a negative. And so, if you add all that up, you got a lot of positives and negatives here. In other words, it's not clear what this thing's going to do. And again, if you talk about where can it come back to, I believe this volume bar you see right here, this anchor, is the one it's going to try and get back to. So you need a plan to stick with this if it comes back this far. My take is that you don't want to let it close much lower than this price level right in here. You know, if it closes down below that, more than likely it's going to this, at least. And so that's your plan. If it were me, I'd try to buy as close as I can to that 63.5 number, and I just wouldn't let it close underneath it. I'd stop out and I'd look at it again when it gets down here if that's where it's going. So the point is, all this hype, it's out here. Everybody's talking about it. Is silver bullish? Yes. Is there a shortage? Yes. Does that mean I can just buy it and make money? No, it doesn't. You need to think about how you're going to manage the trade. If you don't think about how you're going to manage the trade, you're going to lose. You're going to give them your money, and you're going to be right back in the same spot you always are, which is, why did I do that, right? Think about a trading plan, put a trading plan together, and use that to trade this. I'm trading it, but I'm taking profits here and there as I can, and I keep watching these charts to decide, where do I exit, where do I enter? That's what you need to decide. Get a plan. Have a great one. See you next time. Take care.